Well, we know the economy is top of mind. The Fed dropped interest rates without government data because of the government shutdown. People are worried about tariffs and spending, and everyone seems to be worried about their money. Joining us this morning is Chuck Gascon, an economist and research officer at the St. Louis Fed. Thank you for being here.
Thanks for having me.
Really appreciate it. We know that the Beige Book was released a couple of weeks ago to give us an outlook of our region. Can you remind people, first of all, what is the Beige Book?
By the title, you can't tell what it is.
Right.
So the Federal Reserve System goes out and talks to business contacts and community leaders all across the nation. And we take that information and we use it for policy purposes. And then we try to take, kind of make it anonymous and disclose to the public exactly what we're hearing about the economy and highlight the trends that we're seeing.
And what are some of the trends? What are the takeaways?
So with respect to the labor market, we are seeing signs that the labor market's cooling. Most businesses are telling us they're just kind of in a pause mode, waiting for some of this uncertainty to die down before they make big changes in their hiring plans. That means that there's not a big demand for labor, but also limited layoffs. But employee turnover rates are also down, so people are kind of sticking in place with their employers.
Okay, so just kind of stuck,
Yeah,
really.
just kind of, install speed is a word that we hear a lot.
Okay, does that happen a lot?
I mean, in a lot of ways, when you look at the data and you look at the broader picture, it puts us in a similar position to where we were back in 2019 before the pandemic. We had a really tight labor market for about 5 years. So in a lot of ways, we're something that's closer to normal, but we're also seeing kind of lower labor force growth, lower hiring. So it's just kind of stuck where it's at this point in time. So I wouldn't say that's a bad thing, but it doesn't pose good for a strong labor market outlook.
Right.
Definitely weaker outlook than what we'd like to see.
Okay, so then what about this idea that there's a middle class recession? Is that real? Is that a real thing?
You do see evidence of it. I mean, when you look at things like consumer spending, people are, the numbers in aggregate look really good. But at the same time, when you look at things like credit card delinquency rates, they're up pretty significantly. So that does show that consumers are stretching to spend, and in many cases, we've seen things like insurance costs go up pretty significantly. The cost of essentials have gone up. So as those essential costs go up, people have put stuff on their credit cards, and now they're struggling to make those payments. So there's definitely tension in that environment.
Absolutely. I mean, you can see it when you go to bread and butter. You go to the grocery store and you're like, oh my gosh, how much did I spend this week on groceries just to start?
And that doesn't even account for the things that we don't buy that frequently.
Yeah.
So you think about like car prices have gone up pretty significantly over the last couple of years. That leads to your insurance company telling you that, oh yeah, if you get into a car accident, your insurance, it's going to cost us more to replace your car. So then your premiums go up. And so they're seeing those things that continue to go up in the background.
And we've seen a lot of people actually be underwater on their car payments because, when everything was like sky high, that's when people bought, and now their loans are under. So we've also heard from farmers, in rural areas, basically kind of seeing this rapid deterioration. What can we take away from this kind of stress and how it spreads?
Yeah, so the ag side of the economy is really weak right now. I mean, it's tenuous at best. I mean, I was in Western Tennessee just a couple weeks ago, and if you look at the fields of the soybeans, they're in rough shape. So you have, crop quality is lower than anticipated, prices are lower than anticipated, export markets have dried up. So row crop farmers are looking at a really tough environment right now, and they're just trying to figure out how they can generate cash so that they can make sure they have enough to buy seed for next season, and that's a tough position to be in.
Yeah, I was going to say, what are they saying other than it's tough? Like, what do they do?
Yeah, very difficult. I mean, they have to work with their banks to try to get credit to be able to move forward into the next season. And I mean, we've seen this environment before in the past, and farmers are resilient and can work through it, but we are expecting, and we're hearing from many contacts that they expect the industry the number of farmers to shrink, probably take some of that marginal farmland off the fields next year.
Yeah, that's definitely been a headline this week, especially in Missouri.
Yeah.
With the Beige Book and this information, what do you forecast, or can you forecast, for St. Louis and the economy here in our region?
Yeah, so the regional economy seems pretty stagnant at this point in time. There's not a lot of things you can point to for signs of really strong growth. That being said, most contacts that we speak to see a continuation of current trends. And that's not necessarily a bad thing because they're just seeing kind of stagnant growth, below trend growth, less than expected, but not necessarily strong drop-offs. But there is more downside risk than upside risk in this environment. And professional forecasters are seeing stronger growth next year. So that is a bright spot. They see uncertainty abating, and they see kind of things settling out into a new equilibrium, and that should boost business investment and hopefully get firms back to hiring. So.
And just a reminder, next year is in 2 months. So
Yeah,
I mean,
exactly.
there's
So,
that,
yeah,
hopefully, right? When does the next beige book come out?
Our next beige book's going to come out in, oh geez, we're going to start writing it next week. So yeah, so it'll be coming out in about 3 weeks. So every couple weeks we'll put a new report out.
No rest for the weary.
Yeah.
Chuck, thank you so much for being here this morning.
happy to
Really
have you.
appreciate it. All right, let's get on over to Gary Frank.